Yes. All right. Okay.
All right, cool. Welcome, everybody. So this is what I call Small Business Bootcamp. So it's kind of like, so you want to start a small business, some sort of legal, tax, and other considerations that are sort of foundational, that are important to know, that once you do these things, you can better concentrate on actually doing whatever it is your small business does. So it's just important fundamentals, I would say. And feel free, they're very sparse slides on purpose, because I want it to be a bit of a discussion. If you have any questions, happy to answer them. Oops. Skip the slide there. This is not order. Okay, cool. Quick disclaimer, I'm a lawyer, but not your lawyer. Get your own legal advice and accounting advice. I'll give some advice, but it's just about talking to myself. So if you want actual legal advice, talk to your own lawyer. This presentation assumes it's kind of a solo operation. So it's you, no employees, maybe a spouse. There are some rules about that and taxation stuff. But in general, this is as basic as it gets. But this is kind of foundational, like I said. All right, so these are the topics I want to just run through. So entity type, so it'll be like LLC, corporation. SS4, which is the form you file to get an EIN, to get banking stuff, so the IRS knows you exist, and banks will allow you to open an account. Some of the formalities, taxation, insurance, retirement stuff, which is really powerful for solo businesses. Intellectual property, contracts 101, arbitration clauses, which is a particular topic that's dear to my heart, and extortion, which kind of sounds weird, but I'll explain what that means. And it's an important topic to keep you out of trouble. All right, entity type. So there's, when you're forming a business, there's several ways you can do it, several legal entities or formulations for that. Sort of the basic one, Jeff, handyman business, I go to your house and fix your pipes just by myself. That's a sole proprietorship. So there is a registration you can do at the county level. It's not required. It's kind of a weird ancient law about that, but at least gives you a piece of paper that says you have a sole proprietorship of your name. So it could be Jeff's handyman service, whatever. Probably the most popular way of doing it these days is an LLC, which is a limited liability company. They're relatively new. I think Delaware started with LLCs maybe in the 80s. Michigan finally passed the LLC statute in the 90s. And LLCs are really, really, really flexible. And that's the great part of them. And we can talk about that a bit. Corporations, which are the old school, you have shareholders, you have a board of directors. There are a lot of formalities required in a corporation, such as annual meetings and books of your directors and your shareholders. And there's only one way that can be taxed, and that's as a C corporation or an S corporation. We can talk about that. And partnership, which is just, again, old school. You file a form with the county. I do not recommend that. There is no protection, nothing. It's just like the most ancient way of forming a business with someone else. So I'm going to focus on LLC because to me that's the most popular, that's the most useful, the most flexible. And the cool part is you can choose for it to be taxed different ways. So what, an LLC, you form an LLC by filing a form with the state of Michigan. It's $25 to file it. The nice part about Michigan is you have to put virtually no information on the form, which is public record. So you just put the name of the LLC, and someone has to sign it. And it doesn't even have to be the owner or the manager. It could be, it's called an organizer, so it can be a friend, relative, your attorney. So the organizer's name is really the only name that's on the LLC. So if you want a bit of anonymity, that's a great way to form an LLC, have someone else sign it as the organizer. You don't have to file anything else with your name on it from then on, which is kind of a nice privacy protection option. There's the question of where do you file it? Some people will say, hey, if you file in Nevada, you don't have to pay income tax. Or if you file in Delaware, Delaware is where the majority of corporations are formed. So if you want to be a giant unicorn company someday, file in Delaware. Well, you can do that but you still have to file in Michigan because you're in Michigan. So there is no benefit to it in the sense that it actually doubles your costs. Delaware LLCs are very expensive to file. I think it's $300 to file it, and then you have an annual fee. And you still have to file in Michigan on an annual basis. So there, it really doesn't benefit you unless you are pretty certain that you're going to get investors, that you're going to grow significantly, and that jurisdictional LLC in Delaware might be a benefit. The people that say, well, if you file in Nevada, you don't have to pay income tax, that's false. That's only if you were actually in Nevada. You still have to file then again in Michigan because you have to file wherever you're doing business. So yes, you have a Nevada LLC. Of course, you're not going to pay taxes in Nevada because you're not in Nevada. You're still going to pay Michigan taxes. So don't listen to those sorts of scams. So just to keep it simple, file an LLC in Michigan. If you want, have a friend sign it as an organizer, and you're done. You do have to do a refiling every year, just an update, just to tell the state that you're still in business. If you don't file that for, I believe it's 2 years, they'll send you a letter saying, hey, your LLC is going to lapse. The interesting part about the statute is that if you stop paying, your LLC still exists. So it could technically, you're not updating it, you're not paying the fee every year, your LLC is legally still in existence. But you just can't change anything about it in that meantime. So if you 5 years down the road, I've run into this, people have come to me and said, hey, I want to update my LLC, update the address. Sorry, you got to go file all of those missing annual reports, which are I think $15 each. Then you can update your LLC. It's probably easier just to file a new one, start over. So in Michigan, it's a little odd. Your LLC never goes away legally, but to update it, you have to file those annual reports.
But if you filed a new one, would you have to get a new FEIN and everything too? And that would be cascading issues.
Yep, exactly. Yep.
How does this work with something like a solely online operation where there might not necessarily be physical presence in any states?
Yeah, so generally wherever you file, you have to have what's called a resident agent, which doesn't have to be you, it could be a friend again. So you have to have someone in the state where you file, where basically you can be served with a lawsuit. So that's public records. When someone wants to sue you, they look up your LLC, they look up your agent. That agent is legally obligated to accept service if you get sued. So don't pick a homeless person because they'll never find them, and they'll never know about the lawsuit, and they'll lose by default. So pick someone who can genuinely accept service on your behalf. It could be an attorney again, it could be a spouse, it could be you. It's okay to put your name on it. Just be aware that that's public record, and everybody will know where to contact you. If you're just you can file an LLC in another state and just do online business, but the problem is wherever you are, basically, is where the LLC is. You're the member of the LLC. And if you live in Michigan, you're still subject to Michigan taxes. And you'll also have to have a resident agent in that other state. So you'll have to find someone in that state to accept service.
And if there are long periods where you're not even in the country, is that an issue at all? Or?
No, as long as you have an agent who can accept service. So the problem is if you don't have an agent that can accept service, the Secretary of State becomes your agent. So they'll accept service on your behalf, but they have no obligation to notify you of that. So they'll receive a lawsuit, the lawsuit will proceed, you won't know it, and you'll lose by default. So that's a problem that you could run into. But yeah, if you have a Michigan LLC and you move to wherever, Europe, that's totally fine. You'll probably be subject to Europe taxes if you're doing business there. But it's totally cool to have an out-of-state member. And that reminds me, the people that own the LLC are called members. So you can have one member, so it's a single member LLC, and you can have multiple members. And generally, you can then choose how you're taxed. So if you're a single member, there are two ways to do that. You can do a disregarded entity with the IRS, and we'll talk about that on the next slide, taxation. So you're just going on your Schedule C on your taxes, personal income tax filing. Or you can choose to be taxed as a partnership, where the partnership files a tax return, and then the members, partners are individually taxed. You can choose to be taxed as a corporation, so either a C Corp or an S Corp. So there's really 4 ways you can choose to be taxed with an LLC. So it's a very powerful, very, very flexible tool. And the nice part about an LLC is what's called an operating agreement, which is basically like kind of the article of incorporation. So So the membership, the operating agreement is the agreement between all of the members and the company on how the company will be managed. If you choose not to do an operating agreement, there's their default rules in the statute in terms of if you have two, let's say you have two members, everything's split 50-50 basically in terms of decisions and distributions and that sort of thing. But you can, with an operating agreement, change that. So if you say, I want one person to put some money in, and you want them to have 10% ownership, you want to have 90% ownership, that's all laid out in the operating agreement. And if you have a disagreement, how that's handled, if you decide to break the company up and dissolve it, that should all be in the operating agreement. And it's extremely flexible. The statute allows you to waive about anything. You can waive your fiduciary duties in the statute, so you can compete with your own LLC and not get in trouble. So there's a ton of flexibility in that operating agreement.
Do you have to be a legal member of an LLC, you have to be a U.S. citizen or U.S.-based business? You can't be a foreign-owned LLC.
Mm-hmm. Yeah, you can. Yeah. Actually, we're going through that right now. We're forming a subsidiary in Canada, and our company in the U.S. will be the member of the Canadian LLC. So there doesn't need to be a domestic member, but you still have to have an agent that will accept services on your behalf.
It would have been interesting just to go in the order that you were given. Just to
It really doesn't matter, to be honest. There is some flow to it, but
yeah.
so once you form your LLC, you have your operating agreement. You then need to file an SS4, which is a form to get that EIN, which is an employer identification number. That's the number a bank will need in order to open a bank account in the name of the LLC. So it's a really simple form. If there's one member, well, actually it's scratch that. It's really simple to file online. You go to the IRS.gov website. The crazy part is the IRS website has business hours, so you have to file it during business hours, even though it's entirely automatic. It's crazy, but that's the government. So you fill out the SS4. You just put in the name of the LLC, your name. You have to put your social security number in, or a member, one of the responsible parties of the LLC. You have to put their information in there, where it was formed, where you're going to do business. You have to give us some basic information about what kind of business that you're forming. You hit submit and you get a PDF. Here's your EIN. And that's the letter that banks will need when you open a bank account. You're in business, basically. As I said, an operating agreement is good. Even if you're a single member operating agreement, sometimes the banks use it. Even if you're a single member LLC, when you open an account, banks will probably still ask for a copy of your operating agreement. So even though you're the only one and you're in charge, you make all the decisions, you can do a very, very simple single member operating agreement that just says you're in charge, you're not liable for the business's debts, that sort of thing. Very, very simple. Open a bank account. You can go to your local bank. I don't recommend Chase. They're a nightmare. But credit unions I love. They're easy. There's an online bank called Mercury. You just go online, go to Mercury's website, say you want to open an account, you'll upload your agricultural organization that you filed in the state, you'll upload your EIN document, they'll review it, you probably have to submit your ID, you're good to go. Then you have a business bank account that's separate from your own, you have your EIN, you have your LLC, you're now a small business.
Can you speak on how you take personal funds to support your business and getting personal income into that business? Can you speak on that?
Yes. The next slide is about taxation, and that's a good spot for that, so let me talk about that. There are some important formalities. So there's this thing called piercing the corporate veil. So an LLC, with the phrase is limited liability company. What does that mean? You limit the liability personally of the owner for the activities of the business. There are ways of getting around that called piercing the corporate veil. So if you're doing things like using your business account or your personal account to intermingle funds, if you're paying business bills with your personal account, or you're paying personal bills with your business account, you're creating what they call an alter ego, and the court will say, really, it's not a separate business. You're not treating it with any formality. You're personally liable for those debts, and it can go in both directions. So there's some important formalities to keep in mind that when you have that business, you've gotten your bank account and all of that, don't commingle funds. Just keep it separate. When you write a check, get checks for your business account to pay business expenses. When you're receiving income from your business activities, put it in that business bank account. And when you want to pay yourself, you transfer from the business account to yourself. So you get that business bank account. I already mentioned Mercury is a great option. You can get a business credit card. These are fantastic for getting points for business expenses. You can multiple credit cards. You can get creative with business expenses. Use accounting software. QuickBooks is very popular, but there's one called Wave, which is completely free. That's a great, I use it myself. Great piece of software. It'll interface with your bank. It'll pull in your expenses. You do all your accounting. Give it 15 minutes a month or something like that. And you're good to go with your books. Business expenses are a great tool. So things that would sometimes be a personal expense, you can make it a business deduction, such as travel. And there are fun rules about travel for business expenses. Like domestically, again, I'm not a CPA and I'm not your lawyer, you would have to verify this. If you're going to a convention, for instance, that's business related, you can write off the entire trip as a business expense. So just keep that in mind. The exception is international travel. That's a lot more difficult. The IRS might, if they come at you, you're traveling to Paris, and you're spending 15 minutes at a convention and saying, I'm going to write off the whole trip, that's not going to work. But for domestic travel, it's a really powerful tool. Things like your personal vehicle, you can write those off if you're doing business things with it. You can write off, you can write off the miles, you can write off the gas, you can write off, there are certain ways of doing that. Meals, when you're talking business with business associates, that's a business expense.
Co-work space rental?
Co-working space rental, absolutely.
Yeah.
You're working here. Your home internet, perhaps. And you also get this wonderful thing called the safe harbor in writing off a chunk of your house as your office. So there's a certain amount, you can do the calculation and tell the IRS that this percentage of your bills are going to your home office, all of that. Or they have a really cool little check the box saying, yes, I use my home office, and they give you an automatic deduction for a portion of your home that you're using as an office. So there are a whole bunch of different business expenses that you could potentially funnel through your company, reduce your tax burden.
Jeff, any particular recommendations of the credit card points?
It depends on what you like in terms of travel. Like I love Delta, so you have a Delta credit card, a Marriott credit card. Those 2 points combined make for wonderful free trips.
If anyone doesn't want to do any of their accounting, I can recommend a company called Bench. Yeah, which they just do it all and then give you something at the end of the year to give your CPAs.
Is that like a bookkeeping one?
It's completely bookkeeping. They do tax work if you want that, but if you prefer your local CPA, they also work with them. But
Check that out, because I've been spending too much time doing my own.
I was tired of using a highlighter every month, and we've been using them for maybe 8 years now, and never once a complaint.
Are they reasonably priced?
Yeah, it's like maybe $1,000 a year,
Okay.
which for the volume of work that you don't have to do on the highlighter and the stuff was.
Bench.
I looked into them, and I think the only reason I could go with it is they use their own internal software, and that way they don't use QuickBooks or something like that. So
Maybe.
if you wanted to look at it or take it over from.
Yeah, but I don't want to do that. But yeah, you can export your data. I don't know what format it is in because I was like, you are now on staff. This is now the accounting team.
Yeah, I needed one of those other tools to integrate something else with it. So.
Yeah.
But there are some others for the names that I looked into.
Yeah.
Again, another problem for me was they would do multi-currency.
Multi-currency.
One of the others. Eventually.
So taxation. So this is where we can talk about how your business shows up on your tax return. So there's, as I mentioned, 4 ways of potentially treating your LLC. Partnership is only if there is more than one member, but the other 3 are available for single member LLCs. So you can be a disregarded entity. So we all file 1040. Schedule C is business expenses. It just shows up there. So you have all your revenue and expenses under Schedule C on your personal tax return. That can cause potentially some audit problems. So if you are using a Schedule C, it's convenient because you only file one tax return. But if the IRS questions one of those business expenses, then your entire return, personal return, potentially becomes kind of open season for them. A slightly less risky way to do it is to elect to be treated as an S corporation. An S corporation is very similar to a disregarded entity in that your income just flows through to your personal tax return, but the LLC itself has a tax return, which is at 1120. You issue yourself a K1, which is a schedule that you just add to your personal tax return. So your personal tax return is your own personal stuff, then you just put that number from the business on one line in your personal tax return, so it really separates things a lot. So if the IRS has a question about your business, they'll look at your business. They won't necessarily look at your personal tax return. And the S corporation also has some benefits in taxation. So you have to pay yourself what's called, and on the next slide we'll show this, what's called a reasonable salary. Well, of course, define reasonable. So if you pay yourself a salary, so let's say, I'll go into this a little bit more detail. So let's say your company nets $100,000. You pay yourself a salary of $50,000. That's subject to the traditional payroll taxes of Social Security and Medicare, which is about 13%, right? So that you still pay that. But another $50,000 is called a distribution or, just distribution. So 50 grand just goes directly as just taxable income. You don't pay that payroll tax on it. So you potentially can save that 13 to 15% payroll tax that you would otherwise have to pay by just calling it ordinary income. And you pay traditional income tax on that, but you save that 13 to 15%. C corporation is unique in that, not unique, but it's double taxation. It's sort of the traditional, the way of putting it. The corporation itself has a tax. Any dividends that the corporation pays you are then taxed on your personal tax return. However, 2017 or whatever it was, the income tax rate for corporations was dropped to 21%. It used to be 35%. So you can engage in some tax strategies to say your corporation's only taxed at 21%. You pay yourself dividends, which are, if you own the LLC for more than a year, are paid at the preferred dividend rate. So you only pay 15% on those dividends. So your combined rate is 36%. So if you're in a high tax bracket, you actually are saving potentially a good amount of money by just giving yourself dividends, or you pay yourself a salary, which also can reduce your taxes. So the corporation, if you want to keep money in the business, basically, and have it only taxed at 21%, that's a great way to save on taxes. So if you want to invest the money in the future, you're not paying yourself necessarily, you want that capital to continue to build up, you're only going to pay 21% income tax on a corporation. So that's kind of a nice way of building the capital. Whereas if you're paying either of those, you're paying a full amount of tax every year on that net income, which is a higher tax value, being 35, 42% or whatever the top is. If that makes sense. Hopefully. So the next slide gives you some comparisons and how that looks in the real world. So here's different ways of getting taxed, and if you had the same amount of revenue for each of these, so it's the same amount of revenue, and for demonstration purposes, here's what your personal tax return would look like. Here's your total taxes paid. So as you can see, if you're taxed as a C corporation, you're paying yourself just a bit of a salary, $100,000, you're paying yourself some dividends, your actual income tax, total tax paid, is the least if you're paying as a C corporation. So LLC and S corp, or I'm sorry, LLC and partnership are going to be the same because that full amount is going to be taxed, whereas the S corp, you pay yourself, again, a reasonable salary, $100,000. The rest of that income will be considered a distribution. You pay a lower tax rate on that. You don't pay the payroll taxes, and you pay less ultimately in taxes. So this is something that gets complex, you need to talk to your CPA about, and they can give you advice on that. They will all know exactly what this looks like and how this works. And they can talk to you about the strategies for reducing your tax burden. If that's something you're concerned about, which I am.
Well, I mean, it's insane. It seems crazy to me to see like your net income of 200K and actually paying 87K in taxes seems like wacky. It seems like, cause it's, so I mean, you would think if you're at that size of a business with that level of revenue, you'd be wanting to consider the C corp, right? Like,
Yes, and it's, like I said, it's also great for keeping money in the business because you're only paying that 21% income tax rate unless you're paying yourself.
is there a limit on that? Like,
There is, it's a nebulous number, it's called excess earnings retention. Again, you have to talk to your CPA about that, because the IRS can start questioning you if you're retaining too much cash. But you can just park it in an asset, or buy a house, or whatever, then it's an asset. So that's not that excess retention. And this was just a demonstration of like I said, the corporation income tax rate is 21%. And now the current top U.S. tax rate is 37%, plus that payroll tax, which is between 13 to 15%. So as you can see, if you're just paying the 21% of the corporation's income, you're saving significant money potentially with that payroll tax plus the income tax brackets.
Can you just briefly explain what those numbers are? Like the amount, base salary, 0 to 11,000?
Yeah, so these are marginal rates, so it's blended. So if you earn $11,000, you're a single person, you pay 10% of that income tax. If you earn $40,000, you pay 10% of 0 to 11,000, and then 12% of 11,000 to 44,000. So it's not a true, like, if you make 40 grand, you're not paying 12%. You're paying a blend between 10 and 12. Same down, and those are cumulative. So as you go up, that additional marginal amount that you're getting paid gets taxed at a higher rate. The lower brackets are still paying these, so it's a blended number. So if you're making $500,000 a year, you're not ultimately at the end of the day paying 35%. It's probably closer to like 30 of the total amount.
yeah, I was always confused by that. It makes complete sense. Like, you could totally take advantage of it. Because I always thought people were like, "Oh, I'm donating money so I can just get to 32." Damn, saving that.
Yeah,
it's
that
not
doesn't work.
Yeah.
And if you're married, these numbers double. That was changed a few years ago as well with that same tax law. It used to be what was called the marriage penalty. So if you married someone and you both had the same income, these brackets were different. It was actually, so as you can see, there's just double the single numbers. Well, it used to be if you were a married couple and you both made decent money, these were a lot smaller. So you actually ended up paying higher taxes if you were married than if you were not married. And so it actually penalized you for getting married if that bumped you up to a tax bracket.
So reason for high divorce rates.
Well, it's funny because it's only the 37% that doesn't reflect the double. So if you're rich, you want to be single.
Well, top 1% need to pay their fair share.
That's a special circumstance, but how does that work with the foreign income exclusion? If, like, for several years when I was living abroad, I wouldn't pay U.S. taxes because I was spending 11 months out of the year in a different country and earning income there, as opposed to
So I believe I'm not an expert on this part, but I believe there's basically like $100,000 amount or something like that.
Yeah.
So if you're making under that and you live in a foreign country, you're not paying U.S. taxes, but you still have to file.
Yes.
That's the pain in the ass.
But if your business is registered here and you're earning income from that business, but you are not in the country for that period of time.
Depends on which taxation format you choose. If it's the sole proprietorship, you're probably not going to pay federal income tax, but you might still pay state income tax because the business is based here and legally earning income in Michigan. All right. Insurance. It's kind of probably not thought about often, especially for a small business, but it's cheap to get insurance. And our insurance agent, State Farm, right above us, she offers, I have one of my side projects, I think it's $300 a year. for general liability, $1 million general liability insurance. It's just an extra layer of coverage for you. One of the things that you should, and this is for your personal, your home insurance or your apartment insurance, ask your agent for personal injury coverage. And that's, what is that? It's different than if someone injures themselves in your property. This covers things like defamation and false imprisonment, which you probably will never do. But if you make a comment on Yelp about the restaurant you went to, you said you saw rats, and they say it's not true, they want to sue you for defamation, this covers that. So I learned that from a personal anecdote. A friend of mine did exactly that. He made comments about a real estate developer in Grand Rapids that were extremely negative. He got sued, and he lost, but his insurance company covered it. So it's like $5 a year or something. And it's totally worth it. It's minimal expense, but it gives you a little peace of mind that you can be a little bit more loose with your reviews of restaurants.
So it's not tied to his business?
I would recommend both, actually. But the business is usually generally already included. But for your personal house insurance, you probably have to ask for it. And different insurance companies will call it different things, but just say, I want the defamation thing. And they'll ask you, are you defaming someone? You say, no, I don't plan on it, but I just want to make sure I'm right.
In the name of the business too, right?
Both, yeah. Umbrella is really cheap. If you have a 401k, IRA, those balances can go up over time, and keep in mind that's an asset. So someone decides they want to sue you, your house, your 401k, your Social Security income down the road. Umbrella insurance is really cheap, so generally, like house insurance will limit itself for injury and things like that, like $500,000 or $1 million. You can get an umbrella to raise that to like $2 million, again for like $20 a year. So just ask for it. It's super cheap. There's no downside to it, but it just gives you that extra bit of protection if you have a good amount of assets. You file it. It takes the trademark office 8 months to even look at your application. Once they look at your application and they decide there are no conflicting marks, they publish it, which it sits out there for 60 or 90 days. Then they give it another 30 days just in case someone was late. And then they actually issue the registration. So it's like at least a year-long process if there's no conflict.
So the advantage of the state is that it's quicker and similar, essentially?
It's quick. The nice part about the federal trademark is the day you file it is the day is your priority. So even though it takes a year to register it, once that registration occurs, it's retroactive to that day you filed it. And you can file two different types of federal trademarks, in use or intent to use. So in use means we're the factory, we've been using this mark for a while, I'm registering it now. Intent to use is if I want to create a business, it's in progress, I want to lock up the name before I actually start business, you file that intent to use trademark. You don't actually get the registration until you start your business and actually start using it, and then you file a form with the trademark office and say, I'm using it now. Then they issue you the registration, and the nice part about that again is it's retroactive to the day that you filed.
In that situation, though, you would be filing under your own name since the business doesn't exist yet?
No, you should form the business and then file it. You can also assign it. So if you did file it as an individual, now the business is in business and actually operational, you file another form to assign it to the business to make sure it's in that name. And the federal trademark gives you priority over the entire country, assuming no one else has been using it. It overrides state trademarks, overrides common law trademarks, and it's a very powerful tool. And it sits out there, I think, for 5 years. You have to renew it every 5 or 7 years after that. And that's in perpetuity. So that's how Disney, for instance, can have Disney for 100 years. And copyrights are for the life of the author plus 90 years. That keeps going up. The Constitution, when that was passed, copyrights were originally just 14 years. There for 14 years. I think it's much more reasonable. Again, Disney lobbied and got that increased to life of the author plus 90 years. So basically, like Disney movies never go into public domain except for the first ones. Steamboat Willie is now a public domain.
Sweet.
Finally.
Finally, we get to go check out all the early racist.
All right, let's try to wrap this up. Contracts 101. Just when you're entering a contract as a business with another service or company, just keep some things in mind. that are really important just to scan as you're reading the contract. If you don't want to pay for a lawyer, I recommend you do, but here's some things to look at. What if everything goes to hell? So that's how I look at every contract. If this goes to shit, what's going to happen? How is this resolved? What am I on the hook for? What are they on the hook for? Just skeptically look at the contract and say, if I were a malicious person, how would I manipulate this contract to get my money? So just think about that. It's kind of a hard mindset to get in sometimes, but just always think, like, what's the worst case? Jurisdiction, venue. You sign a contract with a furniture company, for instance, and they're based in Chicago. They're going to say, well, if they screw up, you've got to sue them in Chicago. So that gives you a real disincentive to argue with them legally if they screw something up. So look at that, see if it's in your interest or theirs, and if it goes wrong, where you go to get resolution. Attorney's fees, oftentimes, they say either of us has to sue each other. The loser pays the winner's attorney's fees, and attorney's fees can be millions of dollars. So that adds up very, very quickly. So keep that in mind. Acceleration. That means if you have a contract that's like payments over time, like rent, for instance, for commercial leases, sometimes this will have that in there. If you default on year one, but it's a 5-year lease, acceleration means they can accelerate that entire 5-year amount that you owe them, and you owe it now. So that can really stick. Liquidated damages means if this goes wrong and you have to breach the contract, and you can't necessarily determine what cost that breach would be to everybody. So if it's something that's like a little bit nebulous or a service, liquidated damages just means this is what you owe us if you breach the contract. It's a number that's predetermined. Arbitration mediation. I'm a big fan of arbitration mediation because litigation is ridiculously expensive, especially if you're in business. People love to sue businesses because they feel like it's a payday. I know this is a very controversial subject because arbitration clauses are often showing up in consumer contracts. But as a business, I highly recommend it because arbitration is much quicker, it's much less expensive. My company, we just got done with litigation that lasted 2 years, several $1 million over a small amount of money, but we don't settle. So if there was an arbitration clause had been in there, that would have been probably a 3-month process. And it's almost like, even if you lose, it's worth it to go through the arbitration because it's not going to cost you as much as litigation.
Yeah, but for me, there's 2 other things that come to mind. One is have an assignment clause in the contracts you do, right? So that if you do sell, like it's built in, so that if you sell, you don't have it in there, then they can just lock in the contract.
Yeah.
And then the other one is just cap on liability. Like that's always the biggest one. Like we get companies that are like, no, what you're going to be stopping. Like you could have the possibility of stopping their business for 10 days, which would cost this. Which is just they can make up these massive numbers. And so you like having a cap on liability to protect yourself. Like it can't ever be higher than this, no matter what happens. All fees, like this is the max.
Arbitration clauses, again, commercial versus consumer, there's different rules. Courts look at them more skeptically when it's a consumer contract, like your bank or credit card or your phone company. They're going to look at more skeptically and say there need to be certain protections for you. So generally, it's like arbitration clauses will say, if you have a claim against us, you have to arbitrate, but you can take us to small claims court if you want to. So if it's like under $2,000, take them to small claims court. Otherwise, you have to arbitrate. Kind of gives that little release valve. Oftentimes, you'll see class action waivers and jury trial waivers in these arbitration clauses, which means you don't have a right to a jury trial, which jury trials are always very uncertain, so companies don't want that. Class action, you can't get together with 1,000 other people and sue for $1 billion. You have to go individually and sue the company and get your $5 gift card for whatever they overcharge you on your phone bill. So this is just an example. Arbitration clause, that's generally for a commercial contract. Arbitration clauses for consumer contracts are generally more complicated than this. And this is sort of an odd one out. But what is extortion? And law school 101, you learn what not to do as a lawyer. This is like the first thing they tell you. Don't threaten people with criminal complaints to get your way, even if they broke the law. So you can't say, hey, you stole $5,000 from me. If you don't pay it back right now, I'm going to call the cops. That's extortion. It's a definition that most people probably don't quite get. So even if they truly stole it from you, it's extortion to say, I'm going to call the cops if you don't do X. So there are alternative ways of accomplishing the same thing. I just went through this with one of our businesses. Someone did steal money. You can't call them and say, I'm going to call the cops. You say, I'm going to hire a forensic accountant. And then we'll proceed appropriately from there. You're telling them the same thing. You're telling them potentially there's consequences of it, but you're not threatening them with a criminal prosecution. And it doesn't matter. It's true. It can be completely true that they broke the law. But you can't threaten them with accuse them of a crime or offense in exchange for something. So just keep that in mind. You can say, I'm going to sue you. I'm going to take you to court, civil. You can all day do that. It's just not criminal.
And how can you go through those couple different examples that you've just given about the litigation and that particular money, that thing, and appear so calm all the time, Jeff? What's that secret? It always seems so laid back. Is there a tip in that?
Read the Stoics and Marcus Aurelius. It's good stuff.
Yeah.
Truly. Yeah. That's my place.
Well, you do. I do contract. Not that I would professionally offer it, but any type of services contract I've looked at 1,000, and it's just, and negotiated from the side of the service deliverer, right? And yeah, you can, I've had companies hire third-party companies to negotiate, like this, not even the master services, that's one thing, but the actual core services, and they paid them in a percentage of how much money they saved them. So they not only negotiated the terms, they negotiated the financials, commercials, and they got like 10% of whatever was saved over the first 3 years. It was like so juicy, like it was like so many moments of just silence, like he's like, hey, this is just my job. So you get to be that person. You don't have to be like the enemy. You're like, hey, it's my job to do this.
Yeah. It's really important to have that qualified person look at your contract, because we had one with a service provider who was really bad, and we just said, we're done. We're not going to pay you, and they threatened to sue us, and I read through the contract, and I said, wait a minute. It says if they don't perform the services, they owe us a refund for everything we paid them. So I said, okay, you're going to sue me. I'm going to sue you for everything we paid you.
Yeah.
If we're going to countersue. And they walked out of the arbitration, and I was like,
Yeah.
so they didn't have someone look at their contract.
Yeah.
They screwed up.
Yeah.
I think that's it.
Good stuff.
Now, I did one question that I don't know if it would relate to an individual LLC owner, but do you have any thoughts on like business continuity plans?
It's always a good idea to have your replacement in mind and plan for that. In what sense? Like if one of you.
What about like your bank account, like your business bank account, right? Like say, like where does that? What happens to that if it's in the name of like your LLC? Like is there supposed to be someone set up somewhere in your operating agreement that like, hey, in the event that the business owners aren't with it anymore, that this is the person that can now access it, or how does that work?
Well, no, I just went through this as well. So you would get a new operating agreement. So if there's a new member or a member quit, that can happen. If you get a new operating agreement from whoever can sign a new operating agreement, bring that to the bank. They'll generally take that and say, okay, you have the authority now.
But you probably want your operating agreement to, before both owners of the company disappear from the planet, to say who can go do those things.
At that point, if you both die, it goes into probate and the process.
That's not a good spot.
Yeah, it just takes time.
But you can avoid probate, right? There's some things you could set up that would prevent it from doing that.
Yeah, I mean there are advanced strategies for you can do just sort of like with property, you can do with an LLC membership agreement a payable on death or transferable on death. So you can put that in the operating agreement as well. Say if I croak, my kid automatically is the member. So yeah, I mean again with LLC operating agreements, they're extremely flexible. You can kind of sky's the limit in what you want to do.
I have a buddy who's one of his major parts of a really large company, I won't say what it is, but he has to do the scenario planning for like business continuity, and it's this massive company. So like, and you can only, I think the lesson I learned from just talking with him a lot is you just need to choose how far you want to go with those scenarios, and then just accept a certain level of risk that it's on the margins and the periphery, right? Like,
Yeah.
you gotta,
I feel like a big company, it feels comforting because you're like, well, there's like 100 people here. Like, they're not all likely going to go. Like, I think someone's going to have access to stuff. And you're like, hey, there's 2 owners who travel together a lot.
Yeah, I know.
who has the keys to the stuff to make sure the employees get paid still?
Yeah. Yep.
That just seems really tricky.
Your state.
Yeah, I mean, you could build it into our agreement and void probate by saying, if I croak, it automatically goes to someone, so.
Yeah.
Would you be willing to, for our members of our community, talk to them individually, just like as someone with your own experience, to talk to them about their business needs and just say, hey, if this was something I grew, for example, if someone wanted to say, Jeff, I'd like to hire you to structure and organize my business. I'm a member of the community. Would you be willing to give me an hour of your time to do something like that? Would you be willing to talk to?
Yeah, I think as maybe you can tell, this stuff excites me, so I'm happy to help, give general advice. We can talk if you need more advanced advice. Certainly.
Awesome. Well, thank you
Thank
for
you.
everything.
Thanks, Jeff.
Thank you.